Hello dear traders, welcome. This is the MK block summary. We are covering 2 weeks in this one. To make a long story short, this period was probably a little bit more advanced than the trading periods we had before, but that makes it interesting. Nevertheless, there were some very good trading setups as well, as it's the case, well, basically always. There are always good trade setups to be found, even in more advanced market phases. Just to let you know, at some point I will stop those MK block summaries because, as you can see, overall the causality is literally repetitive. I've done the summaries for over a year now. We have covered all the different market phases, whether it's a squeeze phase or a phase focused on for our reversals, or like MTS runs, OST runs. You can find everything there. So let's see, I will try to continue the summaries for a while, and then at some point I will use the time which goes into preparing these summaries for like a new video series, something new. So stay tuned. So let's get started. Euro dollar. So as you can see from on the 15th of May, we had the shorties, the smart money algos pushed the market up. So they took the moving averages. You see there's this plateau here as a target as well. So looked bullish back then, also with the expanding shorties. The red squeeze line is slightly upward sloping, as you can see. So the market is sensitive to any more dumb money shorties, to any more sellers on the dumb money side, and it reacts quickly by going up. So remember, we have described the possible scenarios, I think, in the last MK block summary videos. So like an up move, then at some point either a dumb money switch and a trend resumption down, or more shorties coming in, a proper squeeze and a move continuation to the upside. And as you will see here in the particular case of euro dollar, so the price went up, then did a breather down after the main target was taken, and then did an empty pullback up. So that's very interesting. Let's go through this. So on the 17th, okay, the price goes up, the plateau is reached, more shorties came in, so the algos continue to push euro dollar up against those dumb money sellers, kicking out the ones which had a tight stop just above the high. We know these games, they have been documented for a while now. Of course, once the market is overstretched, there are also some MTS developing below the price, but of course the priority was to get rid of the shorties. Then on the 22nd, we had the scenario, so the main target has been cleared, slightly overshot, and then some shorties left. You can see the red squeeze line collapsed and a bit of longies came in, so this looked a bit like the beginning of a dumb money switch. So therefore the algos did a pullback down and took the lower moving average, okay, with some forward reversal energy. So that was very tradable. But after that, so to keep things spicy, on the 24th we had this empty pullback up, okay. So rather than, it filled the option strike target, but rather than taking the MTS, they took the order gap zone up here with a pullback, okay. However, as you can see, overall the shorties left the market, and the market causality showed you clearly that overall the market is empty, yeah. So both squeeze lines were low, no decisive dumb money positions, so therefore we have a low causality bias and therefore higher randomness, right? That's why the smart money is able to do like an empty pullback up like it did here, right after taking the moving average. You see, so they cleared the moving average and then did the empty pullback to the upside just to take the short-term stops, okay? So that's very interesting to see. So of course the up move was tradable to the target. The pullback down was also tradable, but I would say that an empty move like that is not really tradable. So I didn't try to trade any of this because the market is neutral from our perspective. It's empty, right? So we wait for situations where there's a higher bias, and then we place our trades. So what can happen next? Well, as you can see, after this more complex situation, it's very simple. The market is empty, so the dark money flow in the next sessions is decisive. If overall more longies will come in, so the green bars, and this will continue, and the buyers will try to buy the dip, which looks likely right now, then euro dollar will actually go down, and this empty pullback will turn into a trend resumption down towards the lower moving averages. You see? In that case, the green squeeze line would cross the red squeeze line to the upside, and more longies would come in. All right? And then they can go for the lower MTS as well. So it's likely that this is going to happen at some point next week. And maybe they want to clear those order gap zones, clear the high, and then, you know, if longies think, oh, this is a breakout, we're going to buy into this, then the whole thing goes down. That's one possible scenario. But remember, euro dollar at the moment is tricky in advance, because if the market is empty, okay, the bias is lower, so we try to avoid trading under those conditions, as you know. So pound dollar, so we had this beautiful MTS below the price on the 13th, okay, so that got taken nicely. There was a nice trade there. You see, it took all the MTS, and then the situation was pretty similar like euro dollar. Here also we had some kind of gray pattern. Short is coming in, therefore the smart money clearing the high, clearing the plateau against the dark money sellers. Okay, we see the red squeeze line here. Taking the upper stops there, okay, and then the price went into this tight consolidation. So that differed a bit from euro dollar because the shorties were holding up. So as you can see here, with a little up move, they cleared the stop zone above the price against the dark money shorties. In response to that, the shorties came in again. So you see the squeeze line didn't collapse, which is why they slowly went up, okay, to take the short-term stops. And you have to understand, with every pip going higher, more and more shorties get kicked out, of course, yeah? That's how this works. So you see finally here at 10 past 3 on Friday, then the red squeeze line collapsed slightly. So that means that this up move has taken out a lot of shorties, okay? And then in the end, they just cleared both MTS on both sides. Look at this precision. This one with the pin, then the upper one. A little mini house clearing at the end there for anyone who tried to place trades with tight stops. You see, like this is a causality. This is like people who are not aware of this. They will just place trades hoping, for example, there will be either a breakout to the upside or a breakout to the downside. And the smart money simply takes out both of them, and therefore doesn't allow them to have a good risk reward. All right? You understand? So this is how they destroy all these statistical trading systems and positions. Okay? So very nice to see that actually, and to analyze that. Okay. Euro pound, so we had the nice MTS down there below the price, and then, you know, we had longies coming in, so it came down as expected, one of the best trades in the last 2 weeks. That was a beautiful move, not difficult to predict. Came down, filled the option strike target on the way. Okay, then at the long option strike target, this was tradable as well. Went there, spread before the target, and then did the pullback and took the lower MTS. That was nice, very tradable. Then on the 21st, we had those 2 long option strike targets. Here I got stopped out, and as you know, it doesn't happen very often these days. So I was aware that we have an expanding green squeeze line, which means that they're going to go lower to shake off those dark money longies. So the option strike target doesn't take priority. Still, I tried to enter early. So, you know, in these cases, I just got myself stopped out. However, what happened then is this was a nice trade right after. Okay, so on the 23rd. So the longies kind of topped out, but they cleared the low, you see, and then with this order gap zone with an option strike target, so I was a bit cheeky and just, you know, bought into this, but it was a risky trade, okay? We do not place trades on the dark money side, and as you can see, there was still appetite here on the dark money side, okay? Especially if you're a beginner, don't do these things, okay? These are for advanced traders who know exactly what they're doing and who are quick also with their targets and stop loss, okay? So then you see like the longies slightly decreased, so you could see they're leaving. So I bought and took some pips off here. Okay. So I bought in here. My stop was just slightly too tight. I got stopped out, and then did the second long trade. Okay. Nice. Okay, Australian dollar. It gave us so many setups in last week, so this time it was a bit different because we had this mixed money flow. You see, longies as well as shorties, both of them are trying to enter the market. Those highs have been cleared. Outer gap zones have been cleared. Look at the precision here with the MTS. But it wasn't the better choice compared to the other markets. Okay. But to make a long story short, yeah, they took the highs, and then there was a bit of a dumb money switch. The shorties left, you see, with the complete collapse of this squeeze, and therefore the algos let the market drop down to the moving average against those dumb and longies. Okay. These dynamics, they're very decisive. But look at it also a bit from a common sense perspective, so to speak. I mean, look at this day chart. I mean, with that move, yeah, the typical stop hunt move, they cleared 1, 2, 3, 4, 5, 6, 7, 8 highs here. This is a typical stop zone, all right? So with that move, they took all these stops of people who have tight stops, medium-term stops. So no surprise that with that move, the shorties collapse, and the market goes into neutral mode and implodes. Okay, we've seen that many times. Always try to combine this kind of common sense thinking with the causality, because that way you will be able to, how can I say this, like ingrain in your brain also how the dumb money reacts and responds to the price chart, and why they suddenly collapse at certain places. It makes complete sense. It's not super complex. So that may sound very advanced. It's not, because looking at the chart and what the dumb money does, look how repetitive everything is. Okay. So no surprise that the shorties got killed here with that move. Okay, they had to realize they lost because they got stop hunted. Kiwi dollar. So the same thing in another variation as so often. Okay, that short is coming in a lot, went up and did the same thing, but took all these zones against the dumb money shorties. Take note of the squeeze line, okay, the expanding squeeze line, and therefore the up move. Very tradable. I took the trade, the long trade. So we entered expensively into the market, okay, and we took pips to the upside. Very, very nice one. Okay, and then had a similar dynamic. Look at this, typical stop hunt, clearing the high, going back to the order gap zone and MTS, but then consolidating towards the end of the week. Okay, it just went sideways, so wasn't so interesting in the last sessions. Dollar cut was very, very giving. So let's go through this. So we had the longest coming in, the price going down, okay, and gets better here. So on the 20th, we see we have the moving averages there around the price. And this was a great long trade. Okay, we have an MTS above the price here on the 22nd of May. Order gap zone, little gray pattern. Okay, slightly shorties dominating. Some shorties coming in, even though it's not much. But buying long into this here was one of the best trades. Okay, very good trade. Boom. Okay, exactly to the target. And gets better. So this was the main trade. Then we have the option strike target short. So why not take them as a post stop hunt trade in this case, yeah? Because you got the order gap zone plus the option strike target in a post stop hunt scenario. So literally buying, taking profit and selling. I know it's tricky, but why not, right? If the causality aligns, you can literally do that. Okay, but you see the dynamic here. I should expand a bit on this. You see sometimes you wait and then you get two quick trades, right? It's completely non-linear. Some days you have like really cool setups in one pair. Other day, 2 or 3 days, you may not get anything in a pair. So adjust to this non-linear dynamic. Okay, as I often say, not every day is the same. Okay, you need, as a trader, you need to be very adaptive these days. That's essential. Don't try to do the same playbook every day. It won't work. Okay, adjust to the market structure and adjust your own aggressive or passive approach, aggressive or defensive, I should rather say, not passive aggressive. Aggressive or defensive approach adjusted to the market structure. Some pairs you need to play defensive on the same day, other pairs you can play more offensive. Okay. Also, by the way, remember we had some 4-hour energy here, so this is actually a golden combination in dollar cut. So the 4-hour reversal energy combined with the inner range target. We've seen it many times. And I'm very proud that today, on the 25th of May 2024, I mean, I literally have more than a year covered, so countless examples of that stuff, yeah, countless. We have seen it so often. So do you realize now that people who haven't done their homework, they're just ignorant? That's the truth. They're living in a bubble of ignorance, okay? They haven't seen the evidence, the realities in the market I have exposed, because they simply are not aware of that. And still, there are different consciousness levels, but the ones on the lower consciousness levels, they tend to have a big mouth and to be very loud, okay? Not only are they ignorant, they're also loud, and they want to suggest other people what to do, and etc., etc. That's the kind you should really avoid in your trading journey. The ones who are on the lower consciousness level and then also are very loud. They will give you wrong information, and in the end they just cost you money. That's the reality, okay? The traders with a higher consciousness level, even if they initially do not agree how the causality actually unfolds because it doesn't fit their belief system or their assumptions. After a while, after the evidence, they need to adjust their assumptions. As simple as that, yeah. So much live evidence, you can't ignore it. But then again, some people just never find this channel and this work, so they continue to live in their bubble of ignorance. But then again, you could also argue, if they're really serious about the FX game, why don't they do the research? Why don't they try to find stuff like this, okay? Which is like a gem, because this industry is full of scammers. That's the challenge also for me in this industry and this project. More than 90% are simply scammers. So how can we differentiate ourselves, from these kind of people? Well, I hope my work speaks for itself, and that the content speaks for itself. And the fact that I have given so much for free over many years, that's my hope, that people realize that. Will they? Well, let's see. Anyways, let's continue. There was a bit of a footnote. So dollar yen, it had stops on each side. So in such a scenario, we are not keen on trading towards any of those, because as you can see, the market was rather empty. The money flow was mixed, okay? So unless we do not get a really cheap entry price, we're not keen on saying, oh, it will first take this one or that one in this particular scenario. As you can see, they took the upper target first, and then we had this beautiful move here. So I should elaborate on this. Okay, so we had the option strike targets, the outer gap zone. The market was completely overstretched, took the upper stop, so therefore the shorties collapse, and then the whole thing implodes, okay? And look how clearly you can see that in the 4-hour chart. You remember, so we had this house cleaning dynamic pattern here. And then the market went up against the shorties. Dumb money switched to longies. Shorties leave, so the 4 reversal energy takes over. Boom, the whole thing implodes. Tradable if you are at the screen in this moment. Okay, it's only a short window of time to enter your trade there. Okay, so most of you probably missed that, which is fine. The ones who were in front of the screen seeing that unfold, they may have taken the trade quickly. Okay, again, you see the non-linear dynamic of this whole thing, including time. Yes, sometimes you have to wait for hours until there's a very short window of time where a trade can be placed. That's the counterintuitive dynamic, because humans are not really designed to deal with something like that. People like to go to the desk and do stuff at their own will, at their own based on their own timing. That doesn't work in manual trading. You have to wait like a hunter, like a stalker, and then you have to pull the trigger in the right moment. And some people have a big problem with that kind of reality, because they feel they always need to do something. Okay, what happened then? Then with this beautiful option strike target long. So here you can get a cheap entry into this counter move. Look, the market is empty because the shorties are kicked out. The market is completely stretched. So now we get the nice option strike target. So we can enter cheaply into a relatively normal pullback to this OST. Okay, come on. I mean, How beautiful. This is one of the best trades of the 2 weeks, okay? Here you can really take your pips off the market and even let the rest run to the upper MTS like I did as well, okay? These were the moments where you could take your pips in dollar yen. So now things get a bit more complex, and we didn't touch dollar yen after it cleared out there because this is like an empty move. I'm going to elaborate on this now because this is quite interesting. So they took the MTS, boom, 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 took the option strike target, and then here you see already here on the 22nd it turned into this neutral mode. So look, we have like a post house clean scenario because the high has been cleared, the low has been cleared. Shorties came in, they got served. Some longies came in, they got served. Now we have like an LTS, a long-term stop above the price. Okay, so a clear target for the smart money. Okay, they just need to push the market up to take those stops of the dumb money shorties. However, with a bit of dumb money longies in the market. Now, this is important. These longies are within the dumb money tolerance. Okay, so if you're a beginner, really pay attention to this point because beginners tend to fall for this. Even though, this is essential. If you watch the video course, you will understand that very well. Look at this histogram, okay? The current plus historical. This is nothing. Just very few longies who were placed on the right side and are allowed to win in this scenario, okay? The smart money gonna take the LTS, and those buyers were lucky enough to be on the right side and, to be allowed to get a bit into profit. You understand? It happens very rarely. Firstly, these are not many longies. Look at the scale, okay? And this is, remember, the dynamic scale. So these are not many. So of course they're allowed to win because we don't have a squeeze going on where they would add fuel to, okay? So the algos can take the upper LTS, and indeed those little longies were lucky and allowed to win. Now what happened then is also shorties came in right after, so this increases the dumb money tolerance right more. So this is why the market went up, clearing the high against those shorties, okay? And look, overall the market is empty. This is not a squeeze, okay? So very advanced. That's why I wrote neutral, low bias. We do not try to place trades in a scenario like this. Only very, very advanced, experienced traders may do some, let's say, freestyle trade there, but they need to protect themselves with a stop, and they decrease their leverage, okay? Beginners don't trade when the market is like this, obviously, yeah? When I write neutral mixed money flow, okay, all these things, that means automatically beginners sit at the sidelines and watch the show. Do your analysis and maybe do paper trades, whatever, but don't place trades with real money, obviously, yeah? We know the deal. Okay, Euro Yen. So there we see the whole thing, but with this subtle difference, yeah? Those shorties who sold the market again and again, they create a squeeze, so Euro Yen is completely going for the high, yeah? And I know some of you bought into it and then, made money. Good. So all the way up to the 168 level, higher than that. Then we have those two beautiful option strike targets and the short is collapsing. So boom, okay, they're going to fill them quickly. This was tradable and I traded that. But right after the targets are taken, again shorties come in, and even though the squeeze collapses, they're gonna need to kick out those shorties, okay? Boom, look at that. Taken, upper MTS taken, shorties came in, upper SDS taken. So that is how the smart money clears out everything and succeeds in making the dumb money lose while they profit, you understand? By doing the right prioritization. Okay? You won't find that stuff anywhere else. There's only the causality which shows you all that in a leading fashion. So then we had like some shorties leaving, we had MTS below the price, so that looked bearish for a second, okay, a bit of a dumb money switch, but then again what happens? Shorties come in. So the algos need to shake off the shorties by doing this up move. But as you can see, things are changing. So right now it looks like we could get a proper dumb money switch in Euro Yen next week. If more longies come in and more shorties leave, the whole thing is going to implode finally, okay? And they're going to take the lower moving averages. Will they clear the complete high before that? Let's see, okay? But the more Euro Yen comes up, the higher it climbs, the more pay attention to this potential collapse, all right? So Let's keep that in the back of our mind for next week. Pound yen. So first we had this MTS, the price target. You remember in the MK web summary before I said the market can collapse here if this target is taken and longies come in and shorties leave. But that, so once more, like first it looked like, you know, longies are coming, so we had the typical post stop on scenario. But overall, similar to Euro Yen, okay, while we had this pullback, and this was a beautiful post stop on pullback, we have this empty pullback, which is like the last order. I should call it maybe last order. So here, this is a final attempt also for the smart money to shake off any shorties which are placed correctly. That's maybe a little advanced, but that's why we should get a bit into this. Okay, so the market again goes higher, not by much, but still tries to shake off the dumb and shorties because the smart money doesn't want to take any shorties with them which were placed in a good manner. You understand? So they need to shake off the dumb money sellers so that they can't get into a massive risk return trade here. Yeah. So you see the expanding squeeze line, and then, you know, the market gets fragile. They take the overall high there. Okay, they go all the way up. They filled the option strike there just with a quick pin and the order gap zone, but they cleared out. So as you can see, similar to Euro Yen, while there is a bit of a increasing squeeze line, the dumb money flows mixed, the high is cleared, so the market is highly fragile. That means if more shorties leave and the red squeeze line will point downwards next week, the whole thing will implode. Okay, could be a nice trade, but these things need to happen first. We are not pre-guessing these scenarios. We wait for the scenarios to happen in front of our eyes, and then we place the trade. We trade what we see, not what we think. Okay, we are not guessing here. So I'm describing these scenarios which could unfold in front of your eyes, but in order to trade them, you need to see those scenarios on your MK web, on your screens. Okay, needless to say. Now, as a little footnote here, what happens after a while, if you're like the seasoned MK web traders, they because they have seen so many scenarios, at times, exceptionally, they may pre-guess a scenario here and there. Okay, at times. But that's basically not how to approach this. Okay. Do not pre-guess the market structure. We have the whole technology so that you can trade what you see. Okay, and you don't need to guess like everybody out there who is blind and who sees the naked price chart and is therefore blind. Okay, Euro Aussie, we had the longies, it came off, it wasn't so interesting, so it basically went down against those longies. Okay, but the market was empty. Then we had the pullback to this MTS. That was a bit tradable, but Euro also wasn't so interesting this week because it gave us great setups before. But as you can see, I mean, they did a pullback, they cleared the moving averages. If longies come in, okay, and push the green line up and the red line goes down because shorties are leaving, of course they could do a trend resumption down to the low. But that needs to happen first. Then they can also take the MTS on the way. So that's a potential scenario for next week. Pound Aussie, so it took the MTS, it took the OST, but they had to be quick. I missed that one. You had to be very quick for this. And then was just consolidating. Not very interesting, neutral. I didn't trade that. Okay. The pullback to the big moving average. So let's see what happens. But as you can see here, there's no decisiveness in the market structure. So we stay away from Pound Aussie for now. Bitcoin, beautiful, some very good predictions, took all the MTS and had this bullish pattern. Let's look at that. So I did a long-term little increase there because we had the MTS. That was a good moment to buy some Bitcoin for long-term position, you see. So look at this chart. Okay, the lows have been cleared. The price recovers. No more big longies are entering. So boom, that looks quite bullish. Even technically, you see. That looks bullish because the longies don't spoil it. So there's a pullback down. Okay, not enough longies are trying to buy the dip. So that looks pretty interesting. Okay, the metals also very interesting. Oh yeah, I should elaborate on that. Gold and silver. Okay, so where do we start? The 13th. So big moves in the metals. Okay, so gold took the upper MTS, boom. Okay, with aggressiveness. The silver the same. But we come to that. Then we had the option strike target on the 21st. Okay. The short is slightly leaving, so then the whole market changes and turns, okay, and filters out the beautiful short trade, okay. So gold came down, and as expected, went down against the longies. So I traded that. That was beautiful. So overall, look at that. With this up move, they took the highs. And when you see in the news that everybody's getting bullish and they're coming up with all kinds of theories why gold should continue to go up and so on, you know that the dumb money is long and things are going to switch. And that's what you see on the MK web. Okay, long is coming in, pushing up the green squeeze line until it even exceeds slightly the shorties. They took the highs with this aggressive move. The whole thing collapses. Okay. They're going after those longies who think they are buying the dip in the metals, and they get them into drawdown, they clear the low, etc. Okay, nice short trade. Same with silver. So aggressive up move against the shorties. Look at that. Shorties expanding. So the smart money pushes up silver hardcore, takes out everyone. Then what happens? The shorties stabilize. So for a moment the momentum is lost. Then we have the option strike target short. So all we need is the shorties to leave, and then we can take the trade. This is what happened, okay? Shorties are leaving, boom. So we can take the short trade towards the OST. And overall, you see with an MTS, which can get filled, of course, but the market structure overall switched, okay? So shorties are leaving and more longies are coming in. So if the same thing happens like with gold, also it can come down towards the lows. So that's another theme to keep in mind for next week. So as you can see, some beautiful trades, but I would say overall a bit more advanced and a little bit less trade setups than in the 2-3 weeks we had before. But very interesting nevertheless. I didn't trade much in those 2 weeks. I took some of the good trades. I got stopped out here in Euro Pound like I've shown. But I took the second setup. So a very interesting market phase. And you can see like this is more advanced, and many things which you know are shown here, and you are kind of tested by the market on these principles, okay? Such as what to prioritize, which markets to avoid, okay? Like where to not place trades when the markets are empty, neutral, fragile, low bias, okay, and the big moves have happened. So if you miss the good setups, do not try by force to still make some pips by trading something which is not really tradable, okay? Wait for these things because they come. Look, it's proven, okay? You need to wait maybe sometimes a few days, but they come. And here you can go for it and take your pips off the market, okay? That way you get a nice stable equity curve by being selective, like a hunter, okay? Like a stalker, okay? Stalk the market, stalk yourself. Okay, so the next week is going to be interesting. This is quite a long summary now, over half an hour. Whoa. Hope you enjoyed it. If you liked it, please leave me a like, leave me a comment. Okay, share my content as well. It's time that we need to grow this. So I will talk about this in another video maybe. But if you like this stuff and you love that, I did all this over the last years, exposing market manipulation, exposing the big guys who are basically doing unfair things, then support me on this quest. Support us, our tribe, our community. It's not just me at this stage, which is really cool as well. Like nowadays, like it's a group, it's a family. And help others, okay? Prevent them from falling for scammers, for people who just want to have your money and who do not provide any value. It's very clear, okay? If somebody doesn't provide many things for free and doesn't show things for many years, it's most likely just scam and will disappear in 6 months, 12 months. I've seen it so many times over the years, yeah. So many people coming and going and just trying to make a quick buck. They are polluting the FX industry. And hopefully this work here contributes to change that and to show the realities of the market, okay? And to give you insights you would never ever have in any way. Can you imagine all the people who were on this earth and who left, who never had those insights, and who died assuming things about the FX market which were never true, okay? So, if we as a collective can increase our consciousness, that's good for everything. That's good for everybody. If you as an individual can increase your consciousness and decrease your blind spots, your ignorance, it's good for yourself, it's good for the people around you. Okay? To accept reality as it is, to not come with any ideas trying to force them on a reality which differs from your concepts. And hopefully you see that at this stage, after all these thousands of hours, over 1,000 videos, all the things I did on YouTube, whether was live trading or doing these summaries or doing live analysis, blah, 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 all these things you're aware of. Hopefully, the ones who find it and read it and study it, they will understand why things make complete sense. The facts are adding up. Okay, you have out there a very, very dubious industry of people trying to sell stuff, to make a long story short, okay, and who do not provide the right value. And obviously that's not sustainable. Eventually they will collapse. That's the reality, okay? You can't do that for a long time. And this industry is marked by these kind of people. And it's very, very unprofessional. So, hopefully in the next years, these things change, okay, everything consolidates, and more and more traders become aware what they sign up for if they enter the foreign exchange market. And what kind of odds they are dealing with, okay? And what they need to do in order to have a fair chance in this game, okay? What they need to do. What they need to understand, what they need to study. Hopefully this work here gives you guidance. Lots of love. I wish you a great weekend. All the best.